Hey guys, what is going on? It's Shaquan here from SLFX Trading, and in today's video we're going to be looking at three currency pairs. We're going to look at Pound AUD, CAD JPY, and Pound JPY. And we're going to walk you through the process step by step by step. Okay, so as I'm speaking to you guys, it is June 7th and the time is 8:04 p.m. Eastern Standard Time. And I want you guys to understand something when it comes to how we're going to analyze these price charts. These are called swing trading setups. And what swing trading setups are, they are setups that you're going to hold for more than 24 hours. But we have a criteria here. Now, the criteria is how you find your edge in the market. I know a lot of people talking about finding your edge and having an edge, but they never really typically go into what that means. What your edge is a list of rules that you trade based on how you want to see your trade fulfill itself, right? It's basically your technique, and your technique is you. And so that's why I'm calling this a swing trade setup, because number one, swing trade means to hold a trade for more than 24 hours. And we're going to see that through. So let's go ahead and let's get started. Now I'm on TradingView. I use tradingview.com, and I'm going to walk you guys step by step, but I also want you to participate and I want you to engage as well. So with that being said, let's go ahead and start on Pound JPY. Now, if I get on my price chart, every single time I get on my price chart, the first thing, if you don't know, we look at trend, right? Like, that's the first thing that I look at. Now, that's also a part of my edge. I am a trend trader, which means I am trading with the trend. I'm not looking to typically trade against it. I want to take a setup that is naturally flowing with the, if it's an uptrend, I want to buy. If it's in a downtrend, I want to sell. And that's the first part of the criteria that I'm looking for. So if I were to ask you guys, just looking at the price chart right here, right now, what is the trend? What would you say the trend is to you? Because that's important. What do you see? Now, I see an uptrend. And now that I say I see an uptrend, I have to put the evidence of that on my price chart. So I'm going to be using price label tools here. So I'm going to sky out my high and my low and my last high. So I see that my numbers are fluctuating up. So we were at 154.839. Price dropped down to 153.526. Now price is back up to 156.077. Now that I figured out what the trend is, because I see that, price has increased, and it increased May 27th. Now I'm saying, okay, well, what if the buyers come back into the market? Where do I want to buy with the buyers? And this is not just based on one individual candle. This is not when I'm looking to drop down in time frames. I want to stick to this daily time frame. I just want to stay here before I drop down, or even if you drop down, or before I go up, or even if you go up, because you're going to be taking more of an active position here. Now, I enter trades on the daily time frame. That's just me personally. You could be the person who enters trades on the 4 hour, the 1 hour, whatsoever have you. But it's always important to scout out where you want to enter the trade before you do anything else. So I want to enter the trade above 153.526, which is the last higher low. The reason why I'm saying that is because this is where the last influx of buyers came from. And so if people are buying once again, they're going to look to want to buy above the last position that they bought from too. Think about something that's discounted. You see that price keeps rising, but these people are not going to make price go back down as low as it was. So you're looking for the discount. That's what I'm looking for as well. Where's the best place for me to enter the trade for the discount? So this is where you're going to set your market structure. Now, some of you guys may set your market structures completely different from mine. You may be using support and resistance, key levels, trend lines, an advanced pattern, an indicator, whatsoever have you. I use what's called my estimation zones, okay? It is a rectangle, but it's the way I place them on my chart. And I'm doing it based on my higher lows. Not the higher highs, but my higher lows, okay? So with that being said, now price is touching my zone. I've had this area actually scattered out for over a week now. And so I'm just, coming here to redo it with you guys. But Today, I noticed how price closed as well. So price closed as a rejection candle hammer, because the wick on the bottom of this candle on pound JPY is bigger than the wick on top. And the candle body is more so towards the upside. So this is called a hammer candle. Now, I can choose to enter the trade today based on my criteria and my rules being met. Trend is to the upside. Price is touching the zone that I want to enter at, and it's giving me one of my leading candles that I deem necessary for me to enter the trade. So I can go ahead and enter. Now, if you're not as aggressive and you're more conservative, you may say, Shaquan, I may need another 24 hours, or maybe I need to see your green candle to go in my favor. And that's okay. That just means you have to wait, another day, because you want to make sure, you want to trust that your money is going to be making you money, right? You just need a little bit more confirmation before you store a part of your capital into a currency pair. I completely understand that. And that's a part of your edge as well. It's your trading style, because there are conservative traders and there are aggressive traders. And I'll be honest with you guys, as a swing trader, I am very, very conservative. So I highly understand that part. Now let's talk about how we're going to exit the trade, because now we're talking about entering the trade. You can enter now today, or you can enter tomorrow. Maybe you have to drop down in time frames. Maybe you're looking for something in particular. I don't know. It's whatever you use, okay? For me, I'm, a really quick pony, okay? Like, I know what I'm looking for. I know what I need, and I just go for it, okay? Now, with that being said, I'm going to keep this really simple. I'm just going to exit back at the high. Like, I don't need to go to the left. I don't need to go to the left, structure leads clues. I don't need to see what happened 5 years ago, because we have enough data and enough information here. We can already see the buyers. We can already see the uptrend, and we're just going to stop there. There's no need to do any more analysis. No matter what time frame you go on, price still displays the same information. And that is the most important part to understand and remember. Okay. Now, with that being said, gonna go over to the next currency pair, which is gonna be pound AUD. We're gonna stick with the pound pairs for right now. We're gonna keep it in the same category, keep it in the same group. So I'm on pound AUD daily time frame as well. And once again, here's the edge, right? We're gonna call it out loud. Call yours out loud. I am a swing trader. What are you? Right? That's what you want to trade in. Like, you don't want to be a person who drifts too much. Right? What are you looking to do when you get on that price chart? How long are you looking to hold your trade for? How long are you comfortable with holding a trade for? That's the most important part. Okay. On top of that, let's start to look at this again. What is the trend? Do you notice if price is going in an uptrend? Do you notice if it's going in a downtrend? That's what you want to look for as well. What I see on my price chart is I notice that price is going up in an uptrend. And so once I say where I see price doing, I want to put evidence of that on the price chart. But I want to do all of that when nothing is on my chart. No structure, no lines, no indicators, nothing. I want to look at it in its raw and naked form so I can make sure I see what I see. So with that being said, let's figure this out. Let's look at it here. I have a high here at 1.84391, a higher low here at 1.82163, and last week we can see that price closed higher than the last high at 1.84548. Now that price has closed higher, that lets us know that buyers have come into the market, and they're in the market now. So I am going to buy with the buyers, but I'm not going to buy high. So this is why we have that pullback here. So now I can probably buy at a better discount as long as price stays above 1.82163. And so now that that has happened, I want to see if price can stay above, and now it's touching my zone. Once again, I put my zone. I've had this area scouted out already since Sunday. I'm just doing it with you guys once again. I enter at higher lows. So I want price to stay above where the buyer's last push from. And so if they can, and look how today closed, you can call it a doji, or you can call it a rejection candle, since the wick on the bottom of today's candle closure on the daily time frame is bigger than the candle on top, or the wick on top, then you can call it whatever it is to you, because this is very subjective. So now that I see this, like I said, you can enter today, you can enter tomorrow, maybe you drop down in time frames, who knows. But what's important to understand is where you want to exit the trade now for your take profit. And so I'm just going to go back up to the high again where the buyers just came from at 1.84548. Because the more you talk about it, the more you speak it, the more you say it, the more you keep trading the same technique, especially if your technique works and it makes you money and is profitable for you, or you make more money than you lose, then you want to keep doing the same technique over and over and over and over again. You don't want to switch away from it, okay? You want to keep giving it positive energy, positive flow, positive manifestation. And so now with that being said, this is how I'm looking at pound AUD, and I'm done, right? See how tomorrow candles closes, and then we'll go from there. The last one that we're going to take a look at is going to be CAD JPY. Now, we had a pound pair. We had 2 pound pairs, pound AUD, pound JPY. Now we have 2 CAD pairs, CAD JPY, pound JPY. So now we're doing what's called currency pair correlations, where some of these, where pound AUD and pound JPY shared the pound, but now pound JPY and CAD JPY share the yen. And so we're going to cross these and see how they flow together. Okay, so I'm buying pound AUD, I'm buying pound JPY, I may be buying CAD JPY too. So let's see how that looks. At first glance, if I asked you what is the trend on this currency pair, what would you say? And you want to speak that out loud. For me, I see an uptrend. So once again, it's a lot of uptrends today. A lot of buying motions. So now I want to put that in my price chart. Okay, and I want you guys to do the same as well too. So we have a high, we have a higher low, and we have another high here. Okay, so buyers push price up once again in the market, and now, you know, I want to say, okay, well, if price can stay above the last fluctuation from where the buyers last came from, then we are going to take the buy. Okay, if they stay above $89.58 CAD JPY daily time frame, we're gonna buy. Yet again, price is here at my estimation zone. I've had this scattered out for quite some time now. Now this is more of a tighter range here, and it has a little bit more wiggle room to work with. And the reason why I say that is because the distance from $89.58 or $89.58 yen, and from where the distance between where I want to enter the trade is around 100 pips. So price can move between this range of 100 pips, and I'm well aware of that. And this is why time frame correlation is very important, and understanding market conditions is very important. So let's talk about time frame correlations. Notice how I have not dropped down in time frames. I told you guys that I enter trades based on the daily time frame. And I'm also understanding what type of pair CAD JPY is. CAD JPY is a pair that can consolidate. CAD JPY is a pair that can move tightly. And CAD JPY is a pair that can really fake you out a lot. And it does have deeper ranges, which means sometimes you can enter a trade and it'll still go against you before it goes in your favor. And so I'm well aware of that. Now, when it comes to the market condition, it just basically means how is your trend dressing up? And I teach this in 4 ways. You have a broad market, you have narrow market, you have high volatility, and you have low volatility. In this area, we had low volatility because price kind of consolidated and it moved tightly. And now we've pushed up and we're kind of narrow here. But as we're narrow from where I want to enter, from where I have my estimation zone, to the distance of where my last higher low is, price can travel all through here. But as long as it still stays above $89.58, we're still bullish. So that's why I'm looking for buys, but I'm understanding price could go against me a little bit here too, which is the reason why we do use stop losses, okay? Or some of you guys may not use stop losses. It's up to you. But you just have to understand your distances. So with that being said, here, price is at my estimation zone. I'm not going to enter the trade here though. I do want to see how price moves and I could enter and have a better risk to reward, a better one-to-one. But when it comes to this pair and understanding the distance, even though I am still the buyer, I still want to see how tomorrow closes as well too. But if I do enter, the risk reward would be over 1-to-1, and I wouldn't have to really worry about anything. But it just depends on, once again, your edge. I'm very conservative, as I just told you guys, okay? So with that being said, I'm really liking pound AUD to the upside. I'm liking pound JPY to the upside. I'm liking CAD JPY to the upside. If I had to choose which pairs would be better for what I personally see that fits my rules to the T, how I'm liking it, I'm liking pound AUD and pound JPY because I like their market conditions a little bit better. Now let's talk about your edge and when you win a trade or how you lose a trade. If these trades do not work out in my favor, I'm okay with that. One of the reasons why I'm okay with that is because I made decent money riding the trend up. And the trend cannot last forever. So if I do lose the trade, I'm going to treat the market as a friend and say, thank you for the heads up. Now I'll start trading you oppositely. So I can not only make my money back, but now I can start trading in the opposite direction. I've learned that we've been taught to have a negative mindset about the market where, you know, we think the market is beating us up, but we don't really look for the clues that the market is giving us. And I'm starting to look for clues in this market. If I get stopped out, that just means price reversed. And if price reverses, that's the trend switch. So that means that these pairs are no longer telling me to buy. Now they're telling me to sell. I'm going to give it a high five. Thank you for letting me know that. You didn't have to, but you did. So I'm going to treat it as a friend and say, thank you for inviting me in your space. And I made money buying you. Now I'm going to make money selling you. And I appreciate you for giving me that heads up. Right? And I'm finding that sometimes that's what we have to do in this market. So with that being said, if I win, I'm happy because that means that the buyers are still in the market on these currency pairs and I'm still in profit and I can, you know, keep the money in my account or I can withdraw the money, right? It's whatever I want to do. And it's whatever you would want to do too. But notice how on each currency pair, I just keep trading the same technique. I keep my edge. My edge says, Shaquan, you like the daily. You take more positions on the daily. You like holding your positions. You're not trying to figure out the market every day. You're just trying to hold and make your money. You're using slow growth method because you're very patient. And I'm just speaking these things out loud to myself and I'm letting them manifest and I'm letting them sit in my soul and sit in my spirit, right? I'm not here to stress myself out to make money. Like, I'm gonna tell you guys this. I took a nap today. Right? I got out of a session with a new client and I was so happy because the session was amazing. Such a beautiful spirit. And, you know, sometimes one-on-one sessions can really drain you because I'm speaking for an hour straight, right? I'm teaching for an hour straight. And I took a nap with my daughter. We were watching a movie. I fell asleep with my kids. But in that moment, I realized, oh my gosh, Shaquan, you can actually take a nap throughout the day. You don't have to stress yourself over for pairs moving in your favor. You don't have to be on your price charts. You get to breathe. I was sitting with my family. You guys, it's like 2:30 in the afternoon. And I was actually falling asleep watching a movie with my babies. And I realized I'm moving towards freedom. I'm moving towards having options, giving my babies options. They get to see mom when they come home. They get to see mom when they wake up. And that was such a beautiful feeling that it just came over me and it was so emotional today. It was so emotional. And I was in awe in that. And that's why I like this method. You guys, it takes me less than 5 minutes to analyze a currency pair. It takes me less than 2 to 3 minutes to enter a trade. And I always give myself a 15-minute wiggle room with all these things. So at most, when I tell people I have 15-minute trading days, it's because I've put myself in a position to do so without the traditional mindset of trading has to be hard. It has to be complicated. You need all these time frames. You got to sit in your chart for 2 hours. You got to get up at 6 o'clock. You have to do this. You have to do that. I've learned to get out of the traditional ways of doing things that I used to do that caused me stress. It caused me harm in my mind. It caused me to be depressed. It's caused me to have so many mental health issues. And now I'm learning that I get to set the standards for how I want to trade. And now I'm able to teach other people how to do that in less than 6 weeks in one-on-one sessions when they work with me for an hour a week. I get to teach people how to chase their freedom for 6 hours, 6 weeks. And you know, it feels good to be able to do so. It feels really good. Yeah. So with that being said, I pray you guys have a really good day. I pray that, you know, this resonates with you, that you were able to follow me. And I pray that this sits within you and that you have a really great, safe trading week. I'll talk to you guys later.